Hey guys, welcome back to your coaching session. இன்னைக்கு நம்ம எக்ஸ்பிளைனர்ல இந்த சோர்ஸ் மெட்டீரியலை வச்சு ஸ்டாக் மார்க்கெட் பத்தி ரொம்ப இன்ட்ரெஸ்டிங்கான விஷயங்களை பார்க்க போறோம். You know, everybody talks about making money in the stock market, right? But when you're staring at terms like Nifty, DMAT, and Sensex with absolutely zero background, honestா சொல்லணும்னா, it feels like learning a completely foreign language. ரொம்ப intimidating-ஆ இருக்கும், for sure.
Exactly. It is completely normal to feel that beginner anxiety. Inakum puriyadu. But what if you're starting completely from scratch with absolutely zero prior knowledge? Well, today we are laying down the exact blueprint for absolute beginners in the Indian stock market. We are taking you from zero to investor. No confusing jargon and definitely no get-rich-quick schemes. Just the pure, clear basics of how to actually build your wealth safely. So, inniki nama sessionla, idudha nama game plan. First, the market ecosystem. Second, setting up your toolkit. Third, your first game plan. Fourth, traps you must avoid. And finally, next steps for you. Alright, let's just jump right in.
First up, Section 1, the market ecosystem, understanding the playing field.
Okay, so before you step onto the pitch to play, you really need to understand the ground. In India, we have two main pillars for this. The NSE, which is the National Stock Exchange, and the BSE, the Bombay Stock Exchange. Simple as solanamna, even gadan the massive digital shopping malls, where all the action takes place. This is literally where buyers and sellers meet up to trade company shares.
Right. Now, how do we actually measure the performance of these huge marketplaces? That is where these terms come in. Nifty represents the top 50 companies on the NSE. It basically shows you the overall health of the Indian economy. Meanwhile, Sensex represents the top 30 companies on the BSE. So you know when people say on the news that the market is up today? Yeah, they are usually just looking at these two benchmarks.
But who makes sure everyone actually plays by the rules? Idada SEBI, the Securities and Exchange Board of India. Think of SEBI as the strict referee of this entire game. Beginners, nalla gaunichkonge, your money is actually protected by strict regulations. SEBI ensures fair play, so nobody gets cheated, so you can feel safe and confident entering the field.
Moving on to Section 2, setting up your toolkit, the accounts needed to play. Now that you know the ground, you need the right gear, right? You cannot just walk in with cash. Here are the 3 sequential steps. Step 1. You absolutely need a PAN card and a regular bank account for identity and fund transfers. Step 2, your trading account. This is your active portal via brokers like Sirota, Grow, or Angel One to actually place your buy and sell orders. And step 3, your DMAT account. All 3 of these must be linked together to work. Let's focus on that last one real quick. What exactly is a DMAT account? It stands for dematerialized. Nalla purinjukonga? Idida unga digital laka. Just like your normal bank account holds your cash digitally, your DMAT account holds your shares digitally and safely. It is highly secure and managed by huge central depositories like CDSL or NSDL. Alright, Section 3. Your first game plan, choosing your entry strategy. Okay coach, theory ella okay, but eppadi idu nama life la help agum? How do we actually step onto the field? That is the perfect question. As a coach, my biggest advice here is, do not start by picking individual stocks immediately. That is just way too risky for a beginner. Start with mutual funds or ETFs, specifically an index fund like Nifty 50. Why? Because it instantly diversifies your money across India's top 50 companies. Oru company fail ana kuda, your money is safe because it is spread out. It is absolutely the safest entry point. And guys, look at this number. Just 500 rupees. Oru periya myth ennina, people think you need lakhs and lakhs of rupees to invest in the stock market. Absolutely not. This tiny amount is more than enough to start a monthly systematic investment plan, or SIP. You can literally start building massive long-term wealth for the price of a movie ticket. No way you can't afford that. Exactly. The SIP route is a real game changer. It is the ultimate stress-free play. When you invest a fixed amount every single month, you don't have to panic about whether the market is up or down today. You automatically buy fewer shares when prices are high and more shares when prices are low. Idukku per da rupee cost averaging. It steadily builds your wealth over time without giving you any daily anxiety. Now, pro tip time. If you are stubborn and really want to buy individual stocks right away, stick to direct stock investing in blue chips.
Adavadu, large cap established industry leaders. Think of the big names you know and trust every single day, like Reliance, TCS, HDFC Bank. Please, run away from unknown penny stocks that promise to double your money overnight. Trust me, they won't.
Section 4. Traps you must avoid. Fouls that will cost you.
Guys, strict coach mode is on right now. The market can be incredibly unforgiving if you break the rules. There are classic beginner traps that consistently wipe out new investors.
Kandipa idu mukyam. Burn these traps into your memory right now. First, tip-based trading. Seriously, ignore those random WhatsApp forwards and social media hype telling you this stock is going to the moon. Second, avoid FOMO and intraday risk. Do not jump straight into futures and options or FNO. And the last point is the most brutal. The statistical reality is that over 90% of retail traders lose money in FNO. 90%. Please, do not become a statistic.
And here is another hidden trap: ignoring the costs. You absolutely must factor in brokerage fees, STT, GST, and capital gains taxes. When you buy and sell, the broker takes a cut, the government takes a cut through STT and GST, and when you finally make a profit, you pay short-term or long-term capital gains taxes. Every single time you trade, you pay. That is exactly why investing long-term is so much smarter than trading daily for beginners. Finally, Section 5, next steps for you, taking action today.
Knowing the playbook is great, but watching from the stands won't make you any money. Action educator time Vandachu.
Let's execute. Here are your 3 highly actionable final plays. Step 1. Keep your PAN, Aadhaar, and make sure it's linked to your mobile for OTP verification and your bank details ready right now. Step 2. Open that DMAT and trading account with a trusted SEBI-registered broker. Step 3. Park your very first small investment in a low-cost index fund. Remember, this isn't about making $1 million rupees today. It's about learning the real-world mechanics of order placement safely without risking your life savings.
The complete zero-to-investor blueprint is right in front of you. So what is the very first step you will actually take today to secure your financial future?
நாங்க சொல்ல வேண்டியதா தெளிவா சொல்லிட்டோம். Every single day you wait, you lose the incredible power of compounding. Stop watching from the sidelines. Take action today, and we will see you in the next explainer session.